This is a video that I've thought about making for a while now. It's because this chart works so beautifully for a lot of hype stocks that we hear about all the time. Moreover, this chart has actually proven to work perfectly for Bitcoin in every cycle since its inception. This cheat sheet basically lays down 13 different emotions that market participants go through during a cycle. Markets have actually existed for thousands of years and it has kind of mapped itself to human emotions. No matter which market we talk about, these emotions can actually be seen in those markets. You'll often hear the term dumb money and smart money. Dumb money basically mean retail participants like you and me, and this chart is more relevant for us. Once I really understood this chart and how these emotions play out in the market, my buys and sell actually got a lot better, and I hope it does the same for you. Let's begin. I'll try to make this short. For the sake of this video, I have divided the 13 emotions into 6 different phases of the market. These emotions basically repeat due to the market cycle, so we have to start somewhere. So I'm going to start with the phase called the stealth phase. And yes, this is what the Wall Street cheat sheet looks like. The stealth phase is going to correspond to depression and disbelief. So as you'll see, this is right before the market actually takes off. Generally, depression marks the absolute bottom of the market. Nobody wants to touch the market during this time. This is also during a time when nobody is really paying attention to the market. Even the news has gone silent. By the way, during this whole silent phase, smart money has actually been accumulating. After this, we see early disbelief as prices start moving up. And towards the end of this period, as we are entering disbelief, smart money starts accumulating even more. To actually show you how this plays out in the market, I'm going to show you how Bitcoin went through this phase from 2019 to 2022. So in the stealth phase, Bitcoin was at $3,000 in 2019. Everybody thought it was dead. But it wasn't. Soon after that, we arrive the next phase, that is the awareness phase. The key emotions in this phase are hope and optimism. Hope starts emerging as prices start to show some stability. Optimism starts building with consistent gains. This is when a lot of early adopters start stepping into the market. Even the news cycle starts to turn a bit positive. A few smart retail participants also start entering the market during this time. However, the crowd is not here yet. The awareness phase is also very evident as Bitcoin started moving from 5,000 to 15,000. You can already see how beautifully this was playing out. So if you identify this pattern and you want to enter the market, the first two phases are actually the best times to do so. I would say that if you're watching this video, try to identify this pattern in other stocks as well. You will find it very easily. Anyway, as we start coming out of the awareness phase, we enter what's known as the mania phase. This is where you have to start getting very careful. The key emotions in this phase are belief and thrill. Belief in general is a good thing. However, thrill can be quite dangerous as we'll see. The belief of the market participants really solidifies as trends confirm. Thrill kicks in as profits start to grow. This is when FOMO kicks in really hard. A lot of retail participants start entering the market during this time, and this is actually a little late to enter the market. They have missed out on the major gains and now they are trying to get the same gains again. This is where it starts to become a dangerous game. Often during this time, institutional investors also pile in. Now you must be wondering, hey, institutional investors are the smart money. Yes, they are the smart money and they will exit before you do. So keep that in mind. This was also very evident as Bitcoin started climbing from 20,000 to 40,000 in the last cycle. I wouldn't say this is the worst time to enter the market. However, if you're trying to replicate the same gains that others have seen from the depression phase, you might fail, so be careful again. After this phase, we enter the most dangerous phase of the market, and that is the blow-off phase. Yes, this is the most dangerous phase of the market, and this might be the phase that you might have gotten sucked into at one point. The key emotions during the blow-off phase are euphoria and complacency. Both are extremely dangerous emotions. Euphoria generally marks the top. During this time, everybody thinks they're a market genius. This is when things get really wild. And then the market drops. Then what comes next is complacency. The market goes up a little, however, it does not hit the top again, and this is where complacency sets in. The general warning signs are ignored completely. Now in the cheat sheet, you'll see that the complacency bounce is a little below the euphoria phase. However, that's not always the case. These could be very close to each other, or sometimes complacency can come higher than the euphoria phase. However, if you really dig into the specifics, volume plays a big role in this. But this is more for a technical discussion. We can maybe discuss it in another video. During the last cycle, Bitcoin hit $64,000 and $69,000, and this marked the blow-off phase of the market. During this time, there were several predictions of Bitcoin hitting over $100,000 and a lot of people bought into it. The news during the blow off phase is really crazy. This is something you have to be extremely careful about. The news is not doing you any favors. At the same time, a lot of social media influencers will be selling you whatever they can think of. Soon after this, we hit the panic phase. The key emotions during this time are anxiety, denial, and panic. Anxiety really creeps in as prices start dropping. There's a lot of denial about the trend change. People are expecting for the prices to come back. But as that does not happen, full panic mode kicks in as losses keep mounting. Throughout the previous two phases, you'll hear buy the dip a lot. However, in this phase, it starts to turn into get me out of here. This was very evident as Bitcoin had started dropping from 60,000 to 30,000 in the previous cycle. Everybody was scrambling to get out of the market. People who were holding coins were losing all their gains. This is when the type of asset you're holding is going to play a key role. If you're holding that's going to start dropping really fast. Think of things like meme coins and meme stocks. This is how they all end. By the way, if you're enjoying the video so far and find this content interesting, hit the like button and consider subscribing to my channel. Once all the panic sets in, we see the last phase of the market, and that is capitulation and depression again. The key emotions during this time are capitulation, anger, and depression. Capitulation basically means that major sell-offs are happening. People have completely given up on their assets and they are selling completely out of it to get some of their money back. There's a lot of anger in the market during this time. A lot of people are angry at the market as well as angry at themselves. This anger slowly leads to depression in the market. People have given up, they do not want to be part of the market anymore, and slowly the market interest completely dies off. In the last cycle, Bitcoin bottoming around 15 to 20,000 is when we saw this phase. And this is where, for good assets, the cycle kind of resets and it continues on again. If you were to take this entire pattern and apply it to the current cycle of Bitcoin, you'll actually see that this played out perfectly yet again. I'm going to leave it up to you to actually go and check this out. Now, if this is all true and the cycle is playing out that way, we are almost at the end of this cycle, so be careful again. The cycle has either ended with Bitcoin just hitting over $100,000 or we have a little bit more energy left in the market. Now this little bit can be Bitcoin hitting 150 or 200,000 as well. So even if the market goes to 200k from here, that's only a 2x from here. And that's how you should see these cycles. The return on the investment is not that great, especially when compared to the capitulation and depression phase. That's when you should be buying. Here's how to use these phases. The stealth phase is the best time to accumulate. The awareness phase is to add to positions. The mania phase, start taking some profits. And as you start entering the blow off phase, start taking major profits. During panic phase, prepare for opportunities, and capitulation phase is when you start accumulating again. This is what the smart money does, and this is what we all should be doing. Thanks to this sheet, I was actually able to buy Bitcoin around $16,000 in the last cycle. I didn't buy a lot, however, I was making purchases during that phase of the market. Thanks to that, I have positions from then that have actually 7x'd in the market in this cycle. The average was of course much higher and my entire position is not up 7x. However, this cheat sheet helped me quite a lot. I just wanted to make a small video covering this topic because this cheat sheet is very helpful if you really apply it to your investments and trading. Overall, understanding these phases helps you control your emotions, trade against the crowd, identify optimal entry and exit positions, and manage risk effectively. Am I saying that I am an expert at all of these? No, but I'm learning and I plan to do this for the next few decades and I'll keep learning and I hope you do too. I'll see you next week in a new video. Till then, keep learning and stay on top of your finances. Until next time.